Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome to another episode of Stock Break. You're with me, Josh Gilbert. Today we're going to be looking at BYD, one of the biggest EV manufacturers in the world, going right up against Tesla. But before we get started, a quick reminder that this presentation is for educational purposes only. It should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So straight on to BYD. It is arguably the biggest threat to Tesla right now. And it is one of the biggest manufacturers in China. It is the biggest manufacturer in China. At the start of the year, BYD overtook Tesla as the top selling EV manufacturer in the world. It delivered 526,000 vehicles in the last quarter of 2023. And that came as a bit of a surprise. But look, it has continued to sort of move from strength to strength. And just looking back there, the business actually started as a battery producer in 1995. It does now manufacture cars, but the business is still one of the top battery producers in the world, and we'll touch on that a little bit later on as well. Look, the best way to, I think about BYD is it's more like a Toyota rather than a Tesla. BYD makes more compact cars that are seen for the masses with arguably a more affordable price point compared to that of Tesla, which is seen as probably more luxury, but BYD does make a range of luxury models as well. Look, just having a quick look at the comparison there between Tesla and BYD over the last couple of years. BYD has sort of really stood out in that time since sort of really 2021, late 2020. Shares have rose by about 266%, but in the last 5 years, since 2020, shares are up by more than 500%. EV sales have obviously soared. They've had the launch of new battery products. And Warren Buffett has been a shareholder. He's been a shareholder since 2008, but he recently cut his stake, and he's obviously cashed out, as he does after the stock's massive run. The business is expected to deliver 3.9 million vehicles globally in 2024, with some also being plug-in hybrids as well as EVs. And BYD is expected to actually unseat Tesla as the world's largest EV seller this year. They're going to be taking a 17% share of the global market versus Tesla's 17.2%. So that is something to keep an eye on and watch very closely. Price wars this year have taken a bit of a hit on margins, so that's something to keep watching. Margins fell from 21.8% in Q1 to 18.69% in Q2, but net profit did rise 32.8% from a year ago. That was its fastest growth since the end of 2023. The business is dominating in China and is using basically price to squeeze out smaller rivals. In Q2, we can have a look here. Revenue was about 180 billion yuan, which comes in around about 24 billion US dollars. Net income was also around about 9 billion yuan, which was about 1.27 billion US dollars. BYD is actually ramping up its efforts as well to develop intelligent features such as autonomous driving systems, especially with Tesla clearly leading in this area of the market. I mentioned earlier about BYD being a battery manufacturer. It currently sits as number 2 at the end of 2023 in terms of making batteries for electric vehicles, but it also does make batteries for other products as well. But battery costs are approximately about 40% of an EV's cost price. So as scale continues, this should help keep costs lower for BYD. And another key to BYD's success as well is international expansion. Opportunities in Asia, Europe, and America are going to be really important, but geopolitical tensions will be a threat to the company's progress, especially with European and US EV import tariffs as well that are specifically on Chinese-related manufacturers or those actually being shipped from China. So, for example, the US and Canada have put 100% tariffs on BYD exports from China. If they open actual plants in those countries, then those tariffs, therefore, don't still stay the same. Right, a quick look at BYD's valuation. It has come down significantly and it now trades at about 21 times earnings. This is relatively fair in my opinion, given the potential of the EV market moving forward, but at this price in my view, some of those risks that we've mentioned. It is looking, as I said, about opening those overseas factories and countering those tariff risks. And investors are going to really be looking for that further growth in profitability. Having a quick look here at the Guru Focus tracker, it sees the stock as significantly undervalued. And at current levels, it also ranks its profitability at 8 out of 10. But I think that significantly undervalued just really points to the sort of growth of the EV market that is ahead. And given that growth, analysts are extremely bullish as well. According to Bloomberg's analyst recommendations, BYD has 36 buy ratings, 3 holds and 0 sells. And in the short term, average price target is around about 325 Hong Kong dollars. At the time of recording, the price is 275 Hong Kong dollars. Look, BYD has a clear runway for growth ahead, and I think that's pretty important to note. But it won't come without challenges. The transition to electric vehicle does seem undeniable moving forward, but expanding its reach into Europe will be a hurdle, as well as ongoing competition. Look, the business has seen great growth. It has a great product suite in terms of those vehicles, but Tesla is going to be a key competitor, as well as traditional manufacturers like Volkswagen as well. Thanks for watching Stock Break. Let me know in the comments what you think of BYD, and to stay ahead on all things investing, follow us on all podcast platforms. Just search for Digest and Invest.